so far so good for this year. Up yesterday, up on Monday as well. And of course, we do have the January effect that people talk about, where the first 5 days of the trading year really dictate what happens for the rest of the year. How much do you set store to that?
Yeah, I'm not setting too much store to that. I think people think that Santa Claus is still around for the rest of the year. The effects of that Santa Claus rally is still carrying on. So market started well, but time will tell.
Mm-hmm. Of course, Graham, good morning. That might not have held true last year because we had a pretty good year last year, but the first 3 months were pretty dismal in last year, weren't they?
Yes, they were. And in fact, some of the figures that I've been doing, if you have a look at last year, we did a total return of about 30%. But when you look at the market over 2 years, we are still actually behind. We've gone nowhere for 2 years. So the market hasn't treated us very well over a 2-year period. And people must remember that.
Mm-hmm. Greg, what will you be looking for as we go into the new year? Of course, we had earnings out towards the end of last year, not very good. We know that the market is trading on quite a high PE at the moment, relative to its historic levels. What will you be looking for to keep the markets at these levels?
I'll tell you what, keeping them here is difficult, in my opinion. You have the potential, and an investor sentiment at the moment is so upbeat that they're really pushing shares. And I think what you got is this New Year optimism when people come in after a nice break and people think, well, a new clean sheet for the new year, and there is that optimism. But I think what we've got to see is we actually got to see the fundamentals start coming to the party. And, when you have a situation of, I must admit now, the numbers coming out of the US are starting to look a little bit better, but we're going to see withdrawal of stimulus. And I think the big test that we're heading into is whether these markets are stimulus-induced. The rallies that we have seen are now stimulus-induced, or whether they can stand on their own 2 feet. So to me, the most important fact of this year is to see whether markets can stand on their own feet as stimulus starts getting withdrawn from the markets.
Mm-hmm. Graham, what do you think? Do you think that the rallies have been stimulus-induced? We of course had those figures through from the United States that Greg mentioned. Yesterday we had pending home sales, which were a bit disappointing, but we had strong factory orders and also strong car sales, both from Ford and also from Toyota as well. Do you think that the markets can stand on their own 2 feet at this stage?
I suppose time will tell. Look, there's no doubt that having to have a stimulus was very important because it prevented the world from going into recession. In fact, from going into a depression. And there's nothing worse than a depression. But I think the markets are a little bit ahead of themselves at the moment. We're on a 17.2 PE. Long-term average has been 14.6. It means the market is anticipating 18% earnings growth. And we as a house are looking for about 12-ish. So market's a little bit ahead of itself quite early in the year. We're not expecting decent earnings figures to start coming through until deep into the second half of 2010. So we're a bit pricey for the moment.
Mm-hmm. Well, of course, we are going to be getting those first earnings coming through probably sometime next month, and that's for the December year ends and the December half years. And are you expecting some poor numbers from corporate South Africa, Greg?
Yeah, I think it's been a tough period, and I think a few of them will battle going through. Some of them have managed to come through reasonably, but as Graham said, the shares have anticipated a fair bit, and those prices are a little bit steep at the moment.
Mm-hmm. Of course, Graham, you said better results probably from the end of this year and going into next year, and of course we will be coming off a much lower base as we head towards the end of this year, won't we?
Yeah, I think so. Look, earnings growth of 18% is probably achievable, but it'll only be in the second half, and one must remember that the earnings, the quarter that's about to, or the half year that's about to report, is going to be absolutely dreadful. So the earnings growth, which will occur very late this year and very early next year, pertaining in other words to the last 6 months, will be off a very low base. So I think 18 to 20% earnings growth is achievable, but it's only going to come right towards the end of the year.
Mm-hmm. Well, just looking at the JSE at the moment, we're trading around just above 28,000. We've been holding there around those levels for the past month or two. I mean, do you think from here we could test that 30,000 level, or do you think we're more likely to go backwards, Greg?
Markets tend to overshoot the mark, so I'm not going to say it's impossible. I'd be quite surprised, but I wouldn't rule it out. The sentiment that's there. You also got low liquidity in the market for the first period of the year. Let's say the first 2 to 3 weeks. you never know. Markets may be pushed a little bit higher with the optimism that's around, but I'd certainly be a seller if it got up there.
Mm-hmm. Of course, Graham, we do know that the markets are forward-looking, and just looking at the growth picture that is expected globally as well as here in South Africa this year, I mean, the picture is looking a lot more optimistic. What's your view on growth? What are we going to see coming through?
I suppose you've got to look at the three main areas. First of all, the States, we're looking at earnings growth of somewhere between 2.5 and 3. That's pretty much what the Economist magazine is saying. Europe at about 1.3, and South Africa, we as a house are looking at somewhere between 2 and 2.5, about 2.2. So yes, it's looking better. It may surprise on the upside, but I doubt it. We really need to see momentum in the economy. Of course, the World Cup will help South Africa, and there'll be a nice halo effect from it, but actual fundamental growth won't start happening until late this year.
Mm-hmm. What's your view on the World Cup? Do you think we're setting too much on the World Cup, that we could be disappointed? Of course, some are saying that the rand could continue to hold at these levels of around 7.30, even strengthening as we head towards June in the 2010 Soccer World Cup, only perhaps weakening after that.
Yeah, well, I think that might actually end up being a slight negative for our market as such, because you know, with the resource-based economy that we have, we need a weaker rand to stimulate the market. But certainly I think that the run-up and the World Cup itself, with the amount of people that we'll have here, will certainly help keep the rand strong. And it'll be a little bit of a bonus that we have there, but that fillip is certainly needed in the economy.
Mm-hmm. Graham, BOE's view on the rand, where would you see the rand going from here?
The value of the rand on a purchasing power basis, taking a 16-year purchasing power basis, the true value of the rand is about 750. So for the first time, we're starting to look at a rand that's a little bit overvalued. But these things continue for a while, and I suspect the World Cup, the halo effect that you get from it, certainly it's happened to other countries who've hosted the World Cup. The rand probably doesn't look vulnerable at all in the first half, going as possibly as low as 7, and then weakening in the second half when it's all over to about 8. So no major massive strengthening or major massive weakening, but probably down to 7 in the first half and up to 8 in the second half.
Of course, Greg, all this hinges really on what the dollar does, and it seems everybody got the dollar quite wrong, because until a month ago we were talking about the dollar going to 160 against the euro. Now we're at 143, with some people talking about it going to 130. What's driving this strong dollar?
Look, I mean, it's the old story of the crowded trade, and that trade was far too crowded. So the one side, you know, everybody was talking the dollar down, and once we saw some covering start coming in, the market moved the other way. And certainly, I mean, if you look at the numbers, they've, you know, the US are starting to come out of their recession a lot better than Europe as such. So maybe there is a little bit of, you know, support as such on a fundamental basis for the dollar. However, the major problem still lies in all the debt that's been created in the States. And I think it'll be another determining factor on how the US deals with that.
So longer term, we could see the dollar weakening again, you're saying?
Yeah.
Mm-hmm.
Yeah.
Graham, if we do see the dollar reaching that 130 level against the euro, what's that going to do to the resources rally? Because we know much of the improvement that we saw in the gold price towards the end of last year was really just due to the weak dollar effect.
I think two things will happen, and two things need to be watched out for. A stronger dollar will definitely have a modest negative impact on resource prices. There's no doubt about that. But then, as far as South Africa is concerned, a stronger dollar will almost certainly equal a weaker rand. So the rand price of these resources, the ones that we're interested in South Africa, primarily platinum and coal and iron ore, probably remain unchanged in rand terms, but weaker in dollar terms.